Let's take a look now at what's happening in the markets. Asian shares tumbled this morning, led by the biggest slide in Chinese stocks in more than 8 months as investors grew more anxious about the spread of a new flu-like virus in China, just as millions prepare to travel for the Lunar New Year. The likely hit to airline travel from the contagion sent oil futures skidding to 7-week lows, while the International Energy Agency's warning of an oil surplus and a larger than expected increase in U.S. crude inventories rekindled fears of excess supply. Japan's Nikkei stock index slid almost 1% to close trading at 23,795 points. The shares in Hong Kong also took a beating, down close to 2% to close the trading day at 27,778 points, while the Shanghai Composite has fallen 2.75% to 2,976 points. To Wall Street now, where technology shares led the S&P 500 marginally higher last night, as a healthy forecast from IBM helped mitigate worries over the developing coronavirus outbreak. The Dow Jones Industrial Average inched lower to 29,187 points, and the S&P 500 gained slightly to end the day at 3,321 points, and the Nasdaq Composite Index added 0.14% to 9,383 points. Let's continue getting some more market news. We cross to my colleague Arabile Gumede, who's standing by at the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. Not a very good picture emerging from Asia and Wall Street. What's happening with us?
Yeah, so it certainly seems like the coronavirus has certainly put in some negativity with regard to the market picture, and so you're getting that negativity seeping through into our market as well. Certainly a contagion being put, around 11 million people out in China. That city certainly being put under lock and key, if you want to call it that as well. A few cases as well being noted out, and Chinese delegates and officials really saying that they've learned from the SARS virus of 2003 and realized that they need to make sure they nip this one in the bud. We do have, of course, at least one case of somebody who's left China and gone home, which is the United States, and of course seeing a contagion effect on that front. So fears then that this could certainly go well around the globe in some way or other. The hopes are certainly not. Tourism is about to spike, of course, in China with the Lunar New Year and those celebrations, as that brings in tourists on most occasions. And so that could certainly affect how things fare, not just with their economy, but clearly then with illnesses and sickness as well. And that has certainly meant that the globe has looked at it quite differently, and that's why the markets are looking quite negative at present. Our own JSE going down as well, almost 1% at some stage as well this afternoon. So some weaknesses there. Let's check in on how things are faring out in Europe and the rest of the numbers, and we'll unpack the details right after this. We're joined then live here at the Johannesburg Stock Exchange by Viv Govender from Rand Swiss as we unpack that market picture a little bit more. Viv, thank you so much for the time. So massive negativity there for the JSE, having fallen about 2 days ago. Slight recovery, if you want to really call it that, yesterday for the all share, but a pretty damp and negative picture today. That coronavirus seriously making a dent in the market somewhat.
Yeah, I mean, look, we have a couple of big exposures to China, of course, the resources, of course, through NASPAs as well. The resource sector, as you see, is down quite badly. China is not just a large economy, but for the economy of its size, it actually demands more natural resources than you would think. In certain like commodity sectors, it actually accounts for more than half of the world's demand. And so that's why it's been really impactful on the resource sector. Yeah.
Are you getting a sense then that it has to really find a way to be contained immensely for markets to find any way of going up again?
Look, I mean, this is just a few, few dozen cases here. It's not a huge deal at the moment. I think they're just trying to nip something in the bud. And the kind of steps they're taking are pretty impressive. I mean, to put this into perspective, what they've done in Wuhan is like putting a city the size of London, on lockdown around Christmas. Because that's what it is. It's
Yeah.
the Chinese New Year is effectively the same thing as Christmas in China, in terms of the kind of cultural kind of impact of it. People go home, people travel, huge, hundreds of millions of people go home around this period of time. And the fact that you're putting such a huge amount of effort at a small number of cases means that I have pretty strong confidence that they will be able to nip this in the bud. They have much better, controls in China than places like, for instance, where we had Ebola running rampant and so on. So you won't have the same kind of ability for this disease to just escape and pop up in new places. And this is actually one area in which China's repressive regime actually has an advantage over most other countries when it comes to cracking down on basically stopping a disease in its tracks.
Yeah, that could certainly help. Okay, let's turn our attention to the local front, particularly in the equity news. We're getting quite a bit happening. ARC, African Rainbow Capital, deciding to up its stake in Alexander Forbes. That's quite a big deal there.
Yeah. Look, I mean, I think when the previous big shareholder is basically exiting almost entirely, and then ARC is buying a part of that and basically taking up swapping it for a position in the holding company. ARC has been moving into these kind of things for a while, and I do think it's a play on South Africa. If they get it right, if South Africa recovers, this is one of those things that will really do very well, because companies like Alexander Forbes and so on really depend on people having money to invest. Pension funds having inflows. Alexander Forbes has reduced to a certain extent its exposure to retail with that insurance business disposal, but they still, to a certain extent, are dependent on people in South Africa having money that they want to save and therefore fitting it into the pension fund system.
Yeah. In getting into it, though, is it the kind of company that's going to offer you the growth you want? That's one. Two, there are linkages, maybe not direct, with Sanlam. Is that also perhaps going to play a role in this, you think?
Possibly. Look, is there growth possibilities? I do think there is. I mean, because looking at Africa has been one of the most under-resourced areas in the world when it comes, underdeveloped areas in the world when it comes to retirement savings, pension fund savings, and so on. Most people have to rely on their kids, as they go into retirement. And you basically have a situation here where you could have a major player if you are able to make the right moves. Expansion into Africa, expansion to verticals, or getting your services to populations that weren't basically having them available in the past. Everybody needs retirement savings. It's something that I think you have to do in the normal world, or the modern world at the moment. Because I have some, you have some, and there's a reason for that. You know what I mean? Because there'll be a time when you stop working, and you're probably going to live a few years beyond that.
Yeah.
So obviously, huge opportunity, huge possibilities. But at the moment, with the state of the economy, it's a tough industry to be in.
Yeah. All right. Unfortunately, then, Viv, I'm going to have to cut our interview short. We are actually having to cross right through to Kwaiko. Of course, a scenario and a situation there that has continued to play quite a few people.